Hey everyone, David Coe at the Core Real Estate Group. Hey, with it being June, I figured it was a good time to kind of stop and take a look and see where we are as far as real estate sales are concerned at the end of May. And boy, let me tell you, it is not pretty. May was a tough month here in the real estate industry. So I'm going to start off with looking at an article that came out talking about how our actual number of homes, the actual number of transactions is down. And you can read this article, it's down below, but this to me was striking. Looking at home sales in California, we have been hovering in the low 300,000s really since 2023. This is the pace of homes that we sell per year, which is even lower than it was in 2008 with the Great Recession, which even then you can see we kind of hit that level for just a couple of months and then it immediately kind of skyrocketed back up. So, obviously one of the big drivers of this has been mortgage interest rates. And when we look at the 30-year rates, we can see that as of the end of May, rates were all the way up to almost 7% again. When we started the year back in March, rates were kind of in the mid sixes, and through March and April, we had a very strong start to the season. But all of a sudden, when all the talk about tariffs and some of the economic uncertainty started happening, rates started climbing, and the business really took a pause. When we actually look at the actual data, everything here in this blue line represents everything in Los Angeles County. The red line is Orange County. And we look at new listings, at the end of May, we had about 7,000 new listings coming online in Los Angeles County and just under 2,400 in Orange County. That's pretty standard. But when we look at month supply, you can see that there has been a significant increase in the actual month's supply of homes. We are almost up to 5 months of homes in Los Angeles County and almost 3.5 in Orange County. And for reference, usually we say that a balanced real estate market is about 6 months supply of homes. So that means that when you've got about the same amount of advantages between a buyer and a seller, that's usually when you have 6 months of homes, a supply of homes on the market. And as of the end of May right now, we're getting very close in LA County. And in certain pockets of LA County, it is absolutely a buyer's market, and the advantage is starting to shift towards buyers. So if we still have a lot of inventory, you would figure that it would be absorbed by buyers. Well, that's really what's happening. When we look at pending sales completely disappeared in May. We're down below 2,500 in LA County and just above 1,000 in Orange County. And I think it's interesting, those numbers are usually what we see in December. At the end of the year, there's usually a significant drop in the amount of pending sales just because of the holidays. But it peaks usually in the middle of the year. And here we are in May, and we have completely fallen off the charts here as far as the amount of pending sold homes. Now for closed sales, you'll see in May that we don't have this big drop, but more than likely come July, when I look at the June numbers, we are also going to see this really radical drop in the number of closed sales that are happening in these two markets. As far as pricing has actually looks like it's kind of flattening out in Orange County. We actually had a little jump up in LA County, but I have the feeling that we're just kind of starting to see some of the beginnings of what will be somewhat of a decrease in pricing as home inventories start to build and buyers kind of start having a little more inventory to pick from, and quite frankly, sellers become a little bit more desperate and start lowering what their list prices are. And really what's driving that more than anything is consumer sentiment. We're looking here at the Fred University of Michigan consumer sentiment chart, and look at this. It has been dropping all the way through the year. Down to 52.2 is the index on this, which I actually went and looked out max. That level is about as low as it's been in the history. They've been charting this consumer sentiment chart, even lower than where we were in, let's see, what is this? This is, in the 1980s when inflation was raging. So, If you are a home seller, my advice to you is you've got to price your home aggressively. If you try to overprice and act like this is a seller's market, your home is going to sit for a long time, and it's just going to be a matter of time before the price decreases. We still have somewhat of a, seller's advantage, just slightly. So if you are looking to sell your property, first of all, make sure it shows its absolute best. This is a time to stage it. This is a time to make sure that you declutter it and everything is done to put your property in its best light. But you've got to price it aggressively. And if it's worth more, you'll get it. But if you overprice a home in this market, it's going to sit, and then you're going to be chasing the market down as we go through the summer months, which historically is when there's a somewhat of a slowdown in the number of home transactions, just because everyone decides to go on vacation in the summer with school being out. And if you're a buyer, this is the time to get aggressive, right? And although your rates may still be high, there is inventory that's building, and you will start to see some desperation from sellers. So an offer that you wouldn't have dreamed of writing last year might get accepted this year. So that's a look at the market. Of course, every situation is different. Every little micro market has its own little nuance to it. And if you would like some help in guiding you through the home buying, selling, or even investing process, we'd love to help. So feel free to give myself or one of my agents a call. David Coe, the Core Real Estate Group. I hope you're doing well, and hope to talk to you soon.